With the dramatic rise in interest rates, doesn't it sound too good to be true to assume one of those old 2.5% or 3% interest rates that we had just a few years ago? While it sounds too good to be true, with VA loans, there's a possibility for someone to do so. It's with what we call the VA assumption clause within VA mortgages. My name's Evan Kaufman, WeVett Home Loans, here to help our agents win, close, and list more deals. Let's talk about a unique subject today. VA loan assumptions. What are they? How do they work? And how can I help make sure I explain them well to my clients? VA loan assumptions, pretty simple concept. Essentially, it means that a buyer can assume the veteran's loan if they're purchasing the home. Scenario for that can be, and you might have seen this on some of the listings out there already in your MLS. Hey, seller willing to have a VA loan assumption at their 3% interest rate. Pretty darn cool. What it means is that the buyer can go ahead and assume that seller's loan, and they will have their loan balance, their monthly payments, and their interest rate going forward. Really neat. Like the buyer gets that mid 2 or mid 3% interest rate. So cool. What are some of the things that we got to be aware about? How does it work? So how does it work? It's very simple. It just means that they need to apply with the current lender or servicer of that mortgage. What this means, and you really got to pay attention to as an agent especially, is has the listing agent and has the seller of the home already reached out to the servicer or mortgage to make sure that they can do a VA loan assumption. Not all lenders will work with it and deal with it, so it's important to know that. We're seeing a lot of folks advertise it, but not have asked that question. The other thing is, the buyer has to qualify with that servicer or the lender on that end. That's something that could be a little bit of an issue depending on who it is. So just make sure your buyers are aware, hey, you need to still qualify. It's not like you can just get the loan if you have no income. You still need to qualify for the loan with that seller's lender. But big thing is, make sure to know, have they already reached out to know if they will work with them to do so? The typical process can take anywhere from a month to 5 months. We've had clients right now that are in 3-4 months of that stage. So it can take a little bit, but could possibly be worth it. What are some of the things though that we got to be aware about? So the big thing is, if you have a seller that you're trying to list their home and you're wanting to advertise that rate, first, make sure you ask the lender, hey, are we able to do the VA assumption? The other big thing that we have to be aware about, and we say the two major considerations, the release of the liability and the substitution of the entitlement. So for example, if you're working with a listing and they want to advertise that rate and they want to have someone else come and assume it, know that they need to make sure that if it's another veteran buying, that they get a release of liability from their lender and when the other person takes over. Something that's critical. Hey, I need to make sure that we have a release of liability. The other thing is to go with the VA to make sure that you get a true substitution of entitlement. If you do not do a substitution of entitlement, then the veteran's entitlement will still be tied up on that old VA loan, and you can have some major issues. If the buyer that takes over that VA loan happens to default, it could hammer your seller's credit. It could also jeopardize and destroy their ability to go to use a VA loan again. So it's very important to make sure that they get that substitution of entitlement. So, two major things. If you have a listing and they're wanting to list their home and advertise it, think through and make sure, hey, release the liability. We want to make sure we get that cleared. We want to make sure we can do the substitution of entitlement. And we make sure we ask our lender in the first place, will you be willing to do a VA assumption? From the buy side, just let those buyers know, hey, it could take a little bit of time when we got to go through this. And we want to make sure that you know that just because you're buying it, if let's say it's a $500,000 listing, if their loan is $400,000, know that the assumption will only be for that loan. The lenders aren't going to say, hey, we'll let you increase that loan by another $100,000 at that 2.5% interest rate. Doesn't happen. So you have to figure out some other way to make up that difference. It's either bring a larger down payment or some other solution that you can work with that lender or someone else that you have that's on your side. So one thing to think of from the buy side, making sure you let those buyers know. We're personally seeing a lot of folks in places love to try to take advantage of the VA loan assumption. But the thing is, market's still moving hot. VA loan assumptions can take a lot of time. And for sellers, if you're still getting multiple offers, it can be better just to go with a new offer. For buyer side, just be aware that timeline can be a little bit of an issue. So it's always smart to still be pre-approved just in case that VA loan assumption doesn't go through. Evan Kaufman at WeVett Home Loans. Hopefully this helps you go out and win, close, and list some more deals. Take care. Bye-bye.